U.S. airlines on Tuesday reported stronger than expected travel demand heading into the spring, supporting higher fares and revenue growth. This comes even as a surge in jet fuel prices linked to the Iran war has pushed operating costs higher. Executives said carriers were already moving to blunt the impact through fare increases and capacity discipline, betting that resilient consumer and corporate demand would allow the industry to recover at least part of the added expense if elevated fuel prices persist. Shares of most U.S. airlines, including American, United, and Delta, jumped Tuesday morning following the new guidance. Delta's CEO told a conference Tuesday that consumer and corporate demand accelerated into March, prompting the airline to raise its first quarter revenue forecast while maintaining its earnings outlook, though the company later said it was canceling some flights because of delays caused by the partial government shutdown that is leading to very long wait times at TSA security checkpoints. A TSA administrator told Fox News the funding standoff could lead to the shutdown of some smaller airports in the coming weeks. American Airlines also updated investors on Tuesday, saying its first quarter revenue is now expected to rise more than 10%, above its previous forecast of 7 to 10%, as demand outperformed expectations. The carrier said it still expects an adjusted loss per share, but now sees it toward the lower end of its earlier guidance. Jet fuel prices have soared since the U.S. and Israeli strikes on Iran in late February, lifting costs for an industry where fuel is second only to labor in terms of expenses and typically accounts for about 20 to 25% of total operating costs. U.S. airlines are particularly exposed because most do not hedge fuel costs, unlike some European and Asian carriers that use hedging to cushion price shocks. Still, Scandinavian carrier SAS said Tuesday it will cancel some flights in the short term, citing the sharp and sudden increase in fuel prices. Meanwhile, Delta said the industry already had pushed through 2 fare increases in the past 2 weeks, and it remained well positioned to recover high costs with flexibility to cut capacity if fuel prices stay elevated.